Welcome back to another episode, and today we're not going to be talking about anything good. We're actually going to be talking about this huge drop in Meta platforms, aka Facebook. Stock price is down over 23% after hours, and we're going to take a quick look at what's happening. I do want to say earnings call was a bit boring, but this is a market where the earnings call is not going to be as interesting as one would hope. But still, we're going to understand what happened. We're going to take a quick look at overall earnings, and then I'm just gonna share my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So right off the bat, if we take a quick look at earnings, we can see unfortunately revenue barely beat expectations, analyst expectations, and earnings per share actually missed analyst expectations. So that's a first red flag for investors, causing a big drop. The second thing I do want to say is they kind of give us a guidance that analysts were not really hopeful. So for quarter one of 2022, Facebook, Meta Platforms, however you want to call it, is expecting revenue to be somewhere between 27 to 29 billion. Analysts were expecting somewhere over the $30 billion line. So again, now first, they didn't meet in earnings per share. They barely met revenue, and now guidance is looking pretty weak. They're seeing that causing kind of a pull down. The other thing, and we're going to take a quick look at why guidance looks weak. Another thing is, even though family daily active people, family monthly active people, all the kind of metrics for daily active users or monthly active users are up year over year, usually up low to high single digits. They unfortunately did not meet analyst expectations either. And right now, analyst expectations are really kind of driving the market, and if things don't meet it, then the market is gonna beat you the crap up, and it's gonna beat you up, right? And that's what happened with Facebook. All right, so now let's take a quick look at that guidance and why it's pretty weak. And the main reason is they see headwinds in two main places. The first place is in the overall pricing growth. So they say they don't have much pricing powers for three reasons. The first reason is they blame the big player, Apple, right? Apple iOS changes are really impacting pricing side for the advertising business. The second thing is macroeconomics with things like inflation, supply chain disruption. It does seem like they're hearing from their advertisers that advertising budget is decreasing a bit. Finally, things like foreign currency exchanges. Right now, the international market to change to the United States dollars is not on their favor. So the international market in forms of advertising might not be growing as fast. So that's in the pricing side. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. The second headwind that they're seeing is on their impression side. What is impression? Impression, if you're, let's say you're getting hit with ads, every time you get hit with an ad, that is an impression. So let's say you get hit with 3 ads whenever you're kind of searching Facebook, you get hit with 3 impressions. So they're saying that the impressions are decreasing. And the reason they're decreasing are 2 reasons. First, an increase of competition. And during the earnings call, they mentioned TikTok numerous times. They're seeing a huge increase in competition, especially in the younger base demographics, right? So, and that's the kind of the market TikTok is really focusing. So that's number one. The second thing is right now, Facebook is really focusing in kind of reels, which are form of video content. And unfortunately, video content doesn't allow for strong impressions at the moment. For example, when you're searching on Instagram or Facebook with text and images, right? You're just scrolling down, you see a text, you just look at the image, you read the text real quick, and then you keep scrolling and you keep scrolling. So you're gonna keep getting hit with ads. But The difference is when you're watching videos you're usually watching for a longer period of time. There's less scrolling on your end. Because there's less scrolling on your end, you're less likely to get hit with more ads. So Facebook is saying, because of we're kind of moving to the shift of video, you're going to be getting hit with less ads. So in the short term, they are seeing less impression sites. During the earnings call, they mentioned that this is going to be more of a short-term kind of happening, but they do believe that this kind of short-term videos, kind of these reels, are going to be a huge driving for engagement in the future, and they rather just want to grow as crazy as they can right now, and take the bulk end or the bad end of it right now, and then as they grow, they'll be able to grow the amount of impressions they'll be able to share and increase that overall advertising revenue. I personally think that's the best move that they should go into. They shouldn't halt or hold the brakes on growing different types of markets, especially here with the reels. But some investors might be worried that, hey, this is going to truly decrease the revenue for the company. So now I want to say we really understand why stock price is down. All right, the next thing I want to talk about is how this company is planning to use future money and investments. Last quarter, we heard that, hey, Facebook is really focusing on the metaverse, and they're going to be spending a lot of money in capital expense, for example, and total expenses were going to increase dramatically. One thing they do mention it with capital expense, and I wish they would have shared this earlier. I feel like a lot of investors believe that this company was just going to throw a bunch of money into the metaverse. But when it takes a look at 2022 capital expenditure, they believe it's going to be somewhere between 29 to 34 billion. That's unchanged to prior estimates. But they do mention that most of the money here is going to be used for their core products. Even though Reality Labs products and services may require more infrastructure in the future, at the moment, this is not a significant driver for capital expenditures. So that's something to understand, that the money that they're using right now is going to be used for their core products, investing in things like data centers, like servers, like network infrastructures and office facilities, and finally increasing in kind of product talent. And we can see income loss from operations only comes from Reality Labs segments. Even though this market made about $2.2 billion in revenue for the full year of 2021, it actually lost income loss of about $10 billion, and that's dramatic. And they mentioned for 2022 it's gonna also increase dramatically because of the increase in talent. And this increase in talent is mainly engineers being used to develop artificial intelligence, to develop augmented reality, and to develop virtual reality. I want to say, even though things look bad and the stock price did drop over 20%, it's not horrible, right? We did see total revenue, like I mentioned, grow 20%. All daily active metrics increase single to low digits. This company is still buying ridiculous amounts of shares. Just this quarter alone, they bought back about 19 billion. And I'm not going to be surprised if now with this big drop, they're going to buy a lot more shares. They have over $48 billion in cash and marketable securities. And if we take a quick look at their cash flow from operations statement, actually, let's take a quick look at free cash flow. Free cash flow for this quarter alone was 12.5 billion compared to 9.2 billion a year ago. And for the full year of 2021, free cash flow was $38.4 billion. That is insane. This company has plenty of cash to be able to try all these kinds of different technologies, even though we kind of mentioned that video reels is not hitting hard right now and they're kind of losing money there. They have the ability to do so. They built such a great company and such a great business that right now they're able to kind of go really hard on where they need to grow, so like that in the future they'll be able to provide some amazing results to investors. So I do believe Meta Platforms did provide weak earnings. I don't believe those weak earnings amount to a 22-23% drop in stock price. So in the upcoming days, once my time limit is done, I will be purchasing shares of Meta Platforms because this is a company I personally believe will continue to grow. Again, they have the cash available right now to be able to focus in the markets, grow the users, and not worry about the money generated right now. And once they kind of grow those users, then they can start focusing in the money. And personally, that's the type of investment I like. I know there are certain investors that might not like that kind of growth strategy, and that's okay. That's why there's plenty of companies out there in the market. So take care, have a good day, and see you next time.